Alright, so I wanted to look at this dollar chart, or the Dixie, which is a basket of fiat-based currencies. And this is the chart for the past year. I don't have this data in a spreadsheet, but I'm going to show you some data that I have from other years. But anyways, look at the short-term top in the Dixie. It's around 86.69. Hit Control and plus at the same time if you can't zoom in. FYI, this is from Bloomberg. So let's get this straight. So the top, short-term top right now was 86.69. Okay, now I want to look at the spreadsheet that I put together in this chart of the Dixie. Alright, so I compiled this chart over here of the Dixie since 2008. And what I've noticed in this chart, going back for the past 6 years, you could see the dollar has never been able to cross the 90 threshold, right? Despite the fact that there are a lot of currencies that have problems, and yes, there are problems with the US dollar as well. But notice the top here in 2008 at around 88, 89, right? This is when the crisis was coming about, right? Lehman Brothers, everyone thought the sky was falling, this and that. And then the dollar plunged all the way to 78, right? But then all of a sudden, the market started to sell off in 2009, and the dollar appreciated against all these currencies. And you saw a topping pattern right over here around 89. And that's when the bottom was in about in the stock market. So go fast forward a year and a half later, you see the Dixie, the dollar index, when the Eurozone was having problems, it topped out around 88 as well. So remember this over here. So this is showing the Dixie at 86.69 over here, and then we saw it go down. So why was this, number one, the dollar appreciating? Well, it was appreciating because the Japanese yen is also part of the dollar index. It comprises around 10 to 12%. And as I've showed you in video after video, the yen is weakening against the dollar. It was like 101 and it went up to 110. So the dollar strengthened against the yen. So how do I interpret this, and how do I look at overall markets and also the price of gold? Well, my opinion, these central planners, they don't want a strong dollar. Why don't they want a stronger dollar? Because in their mind it hurts these exporters, and these exporters throw a fit whenever the dollar gets high. So what they do is, probably through swaps, they make the dollar go lower. And there's central bank cooperation among everyone. So there's quid pro quo agreements where the dollar would go down, other currencies would go up as a result. And it's in my opinion, so suppose that the triple bottom in gold that I was talking about the other day, let me grab that chart again. So suppose that there is no triple bottom. Suppose that the price of gold goes beneath this 1180 mark within the next month or year, right? What I will look at is, I'm going to look at this dollar index that I have over here, right? And I'm going to probably extrapolate the data. But anyways, if you fast forward to right now, the top was like 86, right? I'm going to look at a topping around 88, 89. If the dollar goes through that range, I would expect, number one, central planners to freak out because they don't want the dollar to get that strong. And I would actually be accumulating gold and silver. This is what I'm going to do. I can't tell you what you guys should do. This is your own opinion. What I would do if the dollar hits this mark again, 88, 89, what I probably would see happening is the price of gold and silver going down. I would see a deflationary head fake where stocks would most likely go down as well, but I could be wrong on that. The last time we saw the dollar go up, right, to 86.69, stocks were rallying, but that had to deal with the yen carry trade. But if it goes to this 88, 89 level, my interpretation is that's maybe a deflationary head fake. And you see everything selling off. And that's when I would probably be buying gold and silver. I'm not going to get the bottom. I'm not going to get the bottom for stocks as well. But what I do see happening in the interim, though, if in the next few years, if central banks say, hey, you know what, we're going to raise interest rates. I mean, there's a lot of confusion in what's going to go on. If they say, hey, we're going to raise interest rates, but then they may back off again like they have right now, I could see this going to 88, 89, and that's when I would be accumulating stocks, maybe for a trade, or maybe gold and silver for a trade. But once again, I have to see the circumstances and how the market's going to react, or how this phony market's going to react. But anyways, these are some levels that I'm looking at for the dollar to accumulate more gold and silver. I bought actually silver. This is a gold chart, by the way, but I bought silver. Must have been like 914 to 920, somewhere around those dates. So it was within a month. I bought silver because I liked the prices at that moment, right? I felt that it was undervalued, so that's why I said, hey, I'm going to buy some silver. It was like around 17.77, right, while the dollar was rallying. Anyways, once again, to reiterate my points, central bankers, in my opinion, especially at the Fed, don't like a strong dollar, and also these corporate fascists in power. And whenever I see that, I'll see a lot of people be bearish on gold and silver. They're going to say, hey, look at this dollar, it's rising, right? Whenever I see that emotion, you know what? I would want to take the opposite side of the trade, right? Now I have a little more free time to do some research and maybe make some trades. Before I was just overwhelmed. I'm still a little overwhelmed right now, but I do have a little more time to do some research in the market so I could get active again. But anyways, guys, what do you guys think is going to go on? How do you interpret this dollar chart? And I'll talk to you guys later. Thanks. Bye.